What's going on, everybody? Thanks for joining us in today's podcast. I'm joined first with my two of my partners, Ian Walsh and Ryan Walsh. What's up, guys?
Hello, hello.
Not much.
Coming off a nice Memorial Day weekend. You guys have a good time?
Yeah.
Nice relaxing time.
And that was it.
Awesome.
Man, I got two toddlers at home. There's no such thing as a holiday.
Yeah, it's a vacation for you, but not for your wife, right?
Right.
Isn't that like the joke?
Oh no, I was working, buddy.
That's cool. Well, today's guest is a real estate agent and from the Bucks County area. Ron, we were just kind of talking about some of my old stomping grounds in Bucks and Montgomery County, and kind of some overlap there. Ron, I'd like you to just kind of introduce yourself. Tell us a little bit about a little bit about you, and we'll take it from there.
So I am a stay-at-home dad first, kind of, and then I was in construction for probably 10 years. I did college, graduated 2007. Not a good time to graduate college. So I strapped on a tool belt for 10 years. My boss called me end of 2019, said, you're the only one smart enough to pass the real estate exam. Please go get your license. I started getting my license in 2020, and then stuff happened. So I didn't actually get licensed until almost the end of 2020. And then from there, just kind of jumped right in, working a lot with investors, mostly friends and family. I do the stay-at-home dad stuff, so I don't have all the time to do the other 80% of what a real estate agent does with all the marketing and the everything else. So I stick really close to my sphere of influence, but I work with a lot of investors, and that's kind of where my background came in from that with all the construction. So
that's great. Now, were these guys that you worked for, or were they just people that you kind of met along the way and developed relationships with or worked with even?
Grew up with more than worked for. So it was the construction was a family business, doing drywall, and we worked from upstate PA out to Lancaster, down to Delaware, Jersey, but kind of in that centralized Bucks, Montgomery, Bucks County area. So yeah, I mean, it's family member that I've known since I was 5.
Okay.
Which helps. It helps because the arguments, the nepotism is great. I highly recommend it. It's a lot harder to get fired with nepotism. So
it's. I was talking to my. I have a. Oh my gosh, 15-year-old. I was going to say 12. I got a 15-year-old, and a lot of times, we talk about how sports and different interactions kind of can play out in business and things like that. And it's amazing how often, if you plan early, you end up creating this great network of friends who you end up working with throughout your whole life. And their success is your success. And it sounds like you took advantage of that, and there's nothing wrong with that. That's good stuff.
Oh, definitely. Yeah. All my friends decided to marry very well-to-do women. So that has been a lot of the outside of working with investors has been buying and selling stuff for them. So.
Oh, that's cool. Cool.
Where do you do most of your buying and selling now, or where your representation now?
Mainly in Bucks County.
Okay.
It's two investors that I work with up there. The one investor has kind of fallen off just because it's been crazy over the past year. 2-3 years ago, it was still the seller's market. 2021, I put in 100 offers. We had maybe 3 accepted. And that was just all of the bidding wars, everything else. And we're cash, no contingencies, close whenever you feel like it. And then, you got outbid by 4 people, or, this was the higher number. And we're still seeing a lot of that, but there's a lot less investors because the margins just aren't there whatsoever.
Mm-hmm.
Have you guys slowed down a lot since the interest rate change as well? Have you kind of felt that in Bucks County, or?
In Bucks County, no, because
it's pretty stable. Yeah,
it's pretty stable, and it's because the cost of living out there. Like so my broker is actually in Berks County. It's in Reading.
Right. Okay.
And the reason why I'm up there is because there's the population density is much smaller. So all of my costs, like all of my desk fees and percentage cuts and everything else, are tremendously lower because of Berks County. And it's, I mean, yeah, we're still finding things under 200 in kind of, A and B neighborhoods. So it's got a lot of real estate out there, but it's not the Bucks County, Montgomery County, and all of the competition that's out there.
Okay. Yeah, I lived in Reading for 5 years or 6 years, so I'm pretty familiar with that area. I like that area. I like Shillington, and like I like the people. It's in general. I don't know. Because I
You know
moved.
where Taylor Swift is from?
She's from Moton. She's like from Moton, I think.
Okay.
Yeah.
Or Why I'm Missing, or one of, yeah, Why I'm Missing. It's Why I'm Missing. Yeah.
I went to college up there as well. I went to Penn State Berks.
Oh yeah, okay, yeah. So, but I don't know. I like that. I like that place. I like that area a lot. And there's pretty good investments up there. There's pretty good just like the type of neighborhoods, the living space. It's like a great. I don't want to say like, because it's more than like further out than a suburb of Philadelphia. So you're right. It's not like Bucks or something like that. But I don't know. For people that aren't familiar with the area, I definitely would tell people to look at there because it's pretty nice.
I definitely love it. It's
Yeah.
my wife works in Princeton.
New Jersey.
But we don't live in
She goes
Jersey
from
because of the
Reading.
taxes. No, I live in Yardley.
Oh, you
I'm,
live in
I'm near
Yardley.
Sesame
Okay.
Place.
Gotcha.
Gotcha.
Okay.
So like when I'm doing all my deals and my broker, I'm driving an hour and a half out to see them.
Yeah. Okay.
But it's where the money's at. But no, we live closer to Sesame Place in PA because New Jersey taxes would have killed us. And then I'm a stay-at-home dad, so like the real estate stuff is kind of my side gig. Like when I take calls and I'm talking to people, they know that there's going to be a screaming 2-year-old
Sure.
asking for a Danimal, and like it's not always. They're actually downstairs right now, so
It's amazing
Okay.
how
Nice.
efficient kids make you. Like there's no, like, you got 10 minutes. That's all you got. So I got to get all the important stuff done. Everything else just doesn't get done, right? So it just makes you extremely efficient right away. Yeah. Are you mostly buying with cash right now, or do you have lenders out in there in that area? Are you using local banks? Like what's the funding like in that area?
So we use a credit union, and a lot of it's going back and refinancing. So I'm seeing a lot of HELOCs anymore, and that's one of the issues we've run into in the past year or two is that everyone now has YouTube, so they've learned how to get creative. Because when you're searching for a year and you're an FHA or you're a conventional buyer, you're getting beat out. And as you're getting beat out, you're watching your pre-qual just shrink. I worked with one guy down in Delaware County. He was approved for 280 and this was as interest rates were starting to climb. Within 6 months, he was approved for like 220. Yeah. And we did find him a place eventually, but a lot of people now are, you got your YouTube, your Reddit, Google. So they're going out there and they're realizing, hey, I can ask, my parents who have been in my childhood home forever for a HELOC, or, I can ask them for some kind of creative financing so that I appear cash. And we're getting a lot more cash appearances through those kind of methods. But a lot of it's HELOCs, a lot of it's refinancing. Those PPL loans that went out, I noticed the competition with investors rose tremendously at a very unique time. So those are kind of being washed away. And a lot of those were new investors. They got a big check. They didn't know their margins. They, saw, okay, I can buy it for this, sell it for this. That's, $20,000 all me. And then you sit down and you go, okay, well, what are your closing costs? What are your holding costs? What's it costing for you to borrow that money? And they go, I don't know. And then you see it back on the market within 3 months, untouched. And they won't come down off their ridiculous price because they can't afford to.
Right. They're afraid to lose money, and then they're losing more money by doing that.
Yeah.
Yep.
So we are seeing a lot of that, but yeah, we're seeing a lot of credit unions. There's a few credit unions around that are lending. The rates are not fantastic, which is just shrinking the margins, pushing out some of the competition. And yeah, it's guys just either if they're doing flips, a lot of flippers are going by the wayside, and there's no inventory for it either. But in the seller's market with the flips, if it hits the market, it's all automatically like, I want as much money as I can possibly get from this. And you do have the blockhead investors who will go in and pay for those prices, and then either do shoddy work or lose a bunch of money. So
yeah, it's interesting right now because like it's so weird that pricing. I guess it's the inventory thing, but with interest rates up and pricing still going up, it's bizarre. So it's like we're obviously in a teetering of some sort where that's going to tip. Like that's unsustainable. But as we speak, it's strange to know that when you put those flips on the market, you're still chasing the next value. So like if the comps are showing 500, you could still put flips on the market and get 550 in a market where interest rates, people are paying double the monthly rate they were paying 3 years ago. It's like all the things that don't line up right now are bizarre, from monthly payments to pricing to inventory. Like none of it like connects correctly. So it'll shake up and it'll shake out. And I think we're close to that point, but there's some weird stuff that still happens like that I just don't sit right with.
These markets like Reading and I mean some of in Schuylkill County in general, I think it's really interesting to see when real estate prices rise. There's like this imaginary line, and we used to see it in Philly neighborhoods when we were investing and looking at different things. Where before the prices reach that line, the neighborhood's a mess. Maybe it's 90,000, maybe it's 130,000, whatever, right? Because there's no incentive and there's no capital to even fix up the neighborhood. And then, you have some investors that might see some promise in the architecture or something like that. And, they get their first sale at 135 that really pushes that high end value. Right. And then you go through 15 years of, really low interest rates and the prices climb and climb and climb and climb and climb. And at some point, normal people have enough equity in their house that they can pull it out and fix it up and put a new roof on and do some windows. And like, it changes the whole dynamic of the neighborhood. And it takes years of an increasing market. I wonder what that looks like if we have the reverse of that, and like we're saying, I don't think there's one thing that you got all of these different moving pieces that don't seem to be connecting correctly. Right. And like, I don't know. It's just, you look at the markets and you wonder where areas like this are they going to kind of recover from this coal belt, downturn that we've seen right? I mean, really over probably the last 30 years, like they haven't had a lot of appreciation. And now these areas are like pretty strong and they're really nice. They're cool areas. People are, moving there.
Yeah. I know like Westchester, the whole, I think that's Delaware County down there, that had a huge boom over the teens. Because coming from the construction family and then working in construction from 2010 to 2020, it was not a good time in those early teens. It was not a good time. Like we went to doing a lot more commercial work, and builders they would go in, they would buy a plot of land and then just start building houses. So you're just building a house, like there's a lot, put a house there, don't worry, it'll sell. To now it's, we're not putting a shovel in that ground until somebody has put a $60,000 deposit on it.
Right.
Which is just, it's decimated the inventory. A lot more condos are going up because there's, the return for the builders isn't there with a single family home.
Yeah.
And that's kind of had a huge impact on just the inventory in general. There's been a little bit more recovery, probably 2017 up until 2020. And then once again, just, huge roadblock. So that inventory issue it's still just rearing its head, as well as, yeah. And you hear, houses aren't affordable. Like every time you turn on the news or, open your email, housing prices are completely unaffordable, yada, yada, yada. And yet there's still multiple bidding wars for almost every house on the market. So somewhere in there, that the data that's being delivered to people and then what's actually happening is completely, I forgot that word. I want to say oxymoronish, but that's not a word. I'll make it up. Oxymoronish.
Paradoxical.
It sounds like it.
Yeah, I like
Paradoxical.
oxymoronish.
There we go.
We'll stay with
Yeah.
oxymoronish.
I like
Paradoxical.
I like
Love
it
it.
better than
Love
that.
it.
Yeah.
Yeah, oxymoronish.
I think of paradoxical and like Thanos.
That might be the title of this video when we put it out. Oxymoronish. Yeah.
Oxymoronical. Paradoxical, oxymoronical. Yeah, one of those. I make up words all the time. It's fun.
I know what you mean. How about that? That's all that matters, right? You know what the guy means. So that's all.
It's a lot of it is just this. It's this, sexy kind of clickbait articles that it's that fear mongering that they're just putting out there, and they want a some kind of snappy judgment from the public, and it's, I don't know who they're interviewing or who they're talking to, or if they're just looking at, this is how much a house cost and this is how much the average income household is, but it's just so bizarre to see those kind of headlines. And they do look at the national level, which just Pennsylvania alone. So like we got Bucks County, Berks County, Delaware County, and then Berks County, like where I do, that's a whole different ball game. Lancaster has like pockets of, in the city of Lancaster, there's, affordable housing and, everything else. And then you go out from there, it's farmland. And then you go up from Berks County into Schuylkill County, and it's the coal mine belt. So, and they haven't recovered yet. So there's still housing out there that's affordable. I think the migration everyone was expecting this huge migration to these smaller towns with the remote work, and more jobs are becoming remote. We've really seen a pullback from that, and now companies are requiring 3 to 5 days. I did a deal where a house was bought and sold within 3 months of each other, which kind of sends up red flags. And the buyers were saying like, what's wrong with this house that it's 3 months later, they're going to lose a lot of money. And it was, they were told they were remote. The company got sold. They were told to go back to Virginia.
Huh. Wow.
So yeah, I think they lost about $120,000, and they sold it for, a few more than they bought it for, but nowhere near enough to cover their closing costs and all their other costs. So, but yeah, I think that's kind of the big thing is that, I don't know what the impetus is to cause the inventory to rise back, because builders are being a lot more cautionary. You got your big ones out there like Toll and Lennar, and they're all kind of trying to snatch up land. At the same time, you have builders or buyers who have been sitting on the sidelines. I just listed a piece of land yesterday, and I had 3 buyers that are like, hey, listen, we've been looking for a few months. We can't find a house. We're going to build one. And I said, great. So I listed the land, and I thought, it's going to take a while. And I already had an offer submitted less than 24 hours after it was on the MLS up in Lehigh County. But Lehigh County is weird because they have their own MLS.
Yeah,
they do. I know, it's annoying. I don't know what will switch that inventory factor. That's a really good question. I mean, I don't think it's foreclosures yet. I mean, you have to have massive job loss to get foreclosures to trigger.
It doesn't feel real estate related right now.
No, it definitely doesn't feel real estate related. That's for sure. But what would cause like a flooding of inventory onto the markets? I mean, you have to force the inventory, so it would have to be. What it is. What do you think it is?
I think it's laws limiting the number of single family homes that can be owned by a corporate entity. I think that some kind of pushback, like I could see some pushback on like BlackRock buying up neighborhoods, right? Where, you've got properties that are in some sort of processing, whether they're full or they're not full, that would have been on the market, and the increase in that kind of volume would have a little bit more equilibrium effect.
I don't know if we want to go down this route for the show, Josh, but who's going to push back on them?
No, I know. I get it. You're asking for answers. I don't. That's the only thing I see.
Yeah. He didn't say how it's going to happen. He just said what'll cause it. Yeah, that's. I mean, that's
but
possible.
as you're saying that, and you're going, BlackRock isn't going to own a neighborhood. So I go, okay, so then BlackRock will own this block, and then Yellow Rock will own this block. Purple
owned by
Rock.
BlackRock.
Yeah,
Owned by BlackRock.
Oh, I can only own
BlackRock.
10 proproperties in my
Yeah.
LLC. Okay,
Yeah.
I guess I'll have to create more LLCs.
I don't know. I mean, either a decline in population or an increase in.
Well, yeah. I mean, that's a real statement, though. I mean, that's what's happening in Japan, right?
That's true. They're not making enough babies.
Their real estate market's following it. So I mean, that's we're talking crystal ball stuff now.
We're also talking 20 years out. Like
we're culling.
Yeah, I mean, culling also an option. I'll put it on your bingo board.
Not a popular option.
Not a crowd favorite. That's true.
No, not a crowd favorite.
All right, Josh. What do you say? Well, about time.
Okay, so yeah, we're going to do this again in 6 months. You can give us your crystal ball in 6 months and tell us how all these houses sprung out of the earth, and now there's plenty of housing for everybody. Until then, all right.
Into December, I don't think that's.
Yeah.
Long shot.
Ron, it's great talking to you. I really appreciate you being on the show. Ron, if somebody wants to reach out to you and work with you, help them find an investment property, how do they get in touch with you?
The best way is call or text. It's 215-882-4379. I am on some of the socials. It's Instagram and Facebook. It's blah, blah, blah. Ron Grams RE for both the Instagram and the Facebook. My website is rongramsre.com. And then my email is rongramsre@gmail.com.
Perfect.
I put it all one little easy compact.
Ron
Grams Real Estate.
I'll put it in the description.
Just spell it right.
So there we go.
Yeah. Grams. There's no H's.
Beautiful. All right. Hey, Ron, thank you so much. I look forward to having you back again, guys. Great seeing you again. And we'll be back here next week. All right, guys.
All right, guys.
Thank you guys so much.
Have a good night. See ya.